As a CPA and someone who has a degree in finance, I think that financial management has a very important role to play in globalization. One of the things that we learn is that the risk-reward trade-off is very important. And one of the things that financial management can do is help the management team of the company understand the right risk-reward trade-off. Investing in new markets, investing in new plants, investing in environments that you don't understand often has a lot more risk. Therefore, it's very important that in the decision-making process, finance gets involved and looks at those risk-reward trade-offs from an impassionate perspective. It also means that finance has to think about the portfolios of investments that companies are making. You may decide that you want to make all your investment in China, or it may be more prudent to look at a bunch of countries that might have both cost and market advantages. So you may be thinking about a portfolio that includes China, India, Russia, Brazil, Mexico, and Eastern Europe. All these places should be considered in the portfolio. Another aspect that finance should be taking part in to make sure that companies make the right decisions is thinking about how to help companies set up operations in those areas. One company that I'm very familiar with, if you want to move to a new market, let's say the Philippines, the finance organization has already set up a process so that they've learned from the last company that moved to the Philippines. And if you try to go there, they can give you the entire package. Who to call, what to do, which companies to contract with. So if you want to move your back office to the Philippines, those lessons are already there, and you can more easily do that. Well, I believe a lot of what's taking place in globalization is having the impact on inflation itself. That in fact the globalization efforts are causing the inflation. Because what's taking place is 1 billion consumers are entering the world market. 1 billion, that's 1/6 or 1/7 of the entire world's population, are moving from abject poverty, which is just getting the minimum number of calories to survive each day, to being able to have a little bit more than that, a little bit more food, let's say 300 or 400 more calories a day, to moving from having paper fans to keep themselves cool to real fans, even air conditioning systems. All this puts great stress on the world food system and the world energy system, which can't react that quickly. It takes a long time for us to develop 10 or 15% more food. It takes a long time for us to produce 10 or 15% more electricity. So what happens is inflation occurs. Now over time, the world economy adjusts to that. We either produce more or we learn to consume less, either through efficiency or through changes in what we buy. And of course inflation therefore will then come back down again. But in the short term, we're going to see spikes in commodity prices because the world is being asked to produce a lot more. Demand is a lot larger than it was. A 15% difference is not something the world is accustomed to moving on in very short order. Interestingly, coming from the rapidly developing economies is a new breed of competitor. Competitors who at one point in time were the outsourcing companies for the most part to the developed country companies, who've now built scale, who've now built the capabilities, and are not satisfied by just supplying multinational companies. They'd like to be multinational companies themselves. They'd like to be in control of their own destiny. They'd like to have their own brands, their own distribution systems, their own product design, and be known as companies in and of themselves. Now we've seen this before in the world economy. In the 1970s, we saw the emergence of companies like Toyota and Honda and Sony from Japan. What we're going to see again is emergence of new challengers. However, this time we think the wave will be a lot bigger, a lot stronger, and a lot more long-lasting. Because now we're seeing challengers coming not from a country of just 120 million people, that is Japan, but from countries with a combined population of 3.5 billion people. So we saw a wave of 50 or 100 companies come from Japan and become global players. It wouldn't be impossible to see a wave of 500 or 1,000 companies coming. This will be a new challenge for all companies, big and small, from the northern and southern hemisphere, from large cities and small cities, that will challenge the incumbents and thereby change the nature of global competition. Most importantly, U.S. companies need to understand the opportunity. Given that 1 billion people will be joining the world's population of consumers, there's a tremendous opportunity to serve these customers, these new customers that are emerging. Therefore, U.S. companies need to understand what's taking place in those markets and understand the needs of those customers and be able to better serve them. They have to recognize that not serving them is also taking risk. By not being there, they leave these customers open for their competitors to gain scale advantages, to produce new products, to take advantage of new innovations that are coming from these markets. And therefore, U.S. companies have to participate in this new trend.